Hi, I am Anna. I come from www.ntvforex.com. Huge dollar sell-off continues, gold hitting all-time highs. Video.http ntvforex.com news ID A424AB 7/27/2020 12:03:36 p.m. Market overview. The market has taken a view on the dollar, and it does not look pretty for the greenback. It seems that every shift in news flow is being interpreted as dollar weakening right now. The impact of the tit-for-tat deterioration in US and China diplomatic relations, along with increasingly worrying reintroduction of containment measures across several key US states. However, it is the perception of the US economic recovery lagging in the second half of the year which seems to be the major factor in driving the dollar lower. This was hinted in the flash PMI data from Friday, and economic data for July could paint a worrying picture for the US. If so, this could usher the Fed towards further easing measures such as yield curve control, whilst there is also a difficult political backdrop of disagreement in Congress over additional fiscal stimulus. However, it could be that if Congress can come together with a support package of measures, then this could change the course of the dollar this week, at least near term anyway. Treasury yields are edging lower as the dollar weakens. The dollar has lost its safe haven appeal. For now, we see Euro USD ever higher, cable breaking out, dollar yen breaking down, but the most eye-opening moves are coming in the commodities complex. Gold has finally hit an all-time high in a move above $1,920 this morning, whilst in just 1 week, silver has rallied a whopping 25%. The contrarians will clearly be looking for their opportunities, but for now, the dollar weakness is continuing. Wall Street closed lower for a second consecutive session on Friday, with the S&P 500 0.6% at 3,215. However, futures are looking a little more stable today, with the E-mini S&P 0.4%. This has enabled a relatively settled Asian session, with the Nikkei 0.2% and Shanghai Composite 0.2%. European markets are mildly higher in early moves, with FTSE futures 0.1% and DAX futures 0.2%. In Forex, the mass USD underperformance continues, with JPY and EUR the main gainers, but also NZD and AUD suggesting it is not necessarily a risk move, more of a dollar selling move. In commodities, silver of 6% higher, whilst gold has jumped over $30 to an all-time high 1.8% this morning. Interestingly, though, oil remains stuck, trading just under 0.5% lower. On the economic calendar this morning we have the German IFO business climate for July is at 0900 BST. Consensus is forecasting an improvement to 89.3 from 86.2 in June, driven by a pickup in both current conditions and expectations components. Into the U.S. session, core durable goods orders at 1330 BST are expected to show an ex-transport growth of 3.5% in June following growth of 3.7% in May. Chart of the day AUD/JPY. Is this a pullback for the risk trade, or something of a bigger correction? The chart of Aussie yen tends to give a good indication on broad risk appetite. The slide back in the past 2 sessions has unwound AUD/JPY to the confluence of 2 trend supports. Support of a near 4-month uptrend at 74.85 is also the support of a shorter uptrend of the past 5 weeks too. There is also a band of support 74.65-75.15 of the breakout of the past few weeks. With the daily RSI unwinding back to the low to mid-50s where previous rallies of the past couple of months have found buying momentum resuming, it feels like this is a market at an important crossroads again. A third corrective candlestick would seriously pressure all these trends, whilst a breach of support at 74.65 support would suggest the bulls had lost control, at least near term. The bigger support comes in at 74.00, which if broken would be the first higher low breached since the recovery really kicked in back in March. Already we see MACD lines struggling to sustain a positive configuration as they cross lower, whilst stochastics are also pulling lower. Holding the confluence of trend lines and breakout support, with renewed positive candles would suggest that corrections remain a chance to buy. This is a key moment for the outlook of the recovery. Brent crude oil. It is interesting to see that although the dollar has been under huge pressure, which is a source of strength for commodities, there is a curious lack of upside drive through Brent crude. With oil being so closely tied to economic recovery and subsequently risk appetite, as market sentiment has suffered, so oil has been dragged back. It is more a sense that oil is unable to push on with these conflicting forces at work. Despite this though, there is a positive bias to Brent crude, with the rising 21-day moving average today around $43 still a basis of support, as it has been for the past 6 weeks. The gentle drift back of last week is again looking to find support at the 21-day MA, and the run of higher lows remains intact. These near-term corrections are seen to be renewed opportunities to buy. There is still a bias towards higher highs too, and last week's multi-month high of $44.90 will be eyed by the bulls. However, the key resistance remains the big March gap down from $545.20, which if can be closed would be a significant barrier broken and really open the recovery potential once more. Initial support of note if the first higher low at $42.35 with $41.30 below. Dow Jones Industrial Average. The Dow fell for a second successive session on Friday to now sit challenging the key support of the near 4-month uptrend recovery. We have focused previously on the importance of the 26,300–26,610 band of support, which was previously resistance through June and early July. The bulls will be intent on defending this area, as the uptrend also means it is a confluence of support around 26,300. It means that this could be an important turning point for the Dow. Momentum indicators are beginning to reflect this too, with stochastics threatening to cross lower, along with MACD lines. Closing under 26,300 would not be a technical breakdown though, just a significant warning that the bulls are losing their way. The first real higher low at 25,525 would be the support to watch for a significant technical breakdown. The bulls will be looking for a response though today, with the close back above 26,610 being encouraging. There needs to be a move back above 27,070 for the bulls to be back on track. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.